if you don't have mental agility, you're just going to be stuck in the quicksand that you're already scraping to get out of. Yeah. And you're really not going to be going anywhere. Right. You're just going to feel busy because you woke up being like, hey, I'm busy today. I got, I got this client that I'm going to go, I'm going to go show houses to, but you haven't even got them pre-approved.
Oh my God.
So you're busy wasting and literally spending your time. You're spending it.
Hi, guys. Welcome back to another episode of Selling Houston, the podcast. My name is Courtney Oconlamo, broker owner of Collective Realty Co. And my lovely guest co-host here is Matthew Bramow with First Horizon Bank. Tell us a little bit about who you are and why you're here. Why did I choose you to sit here?
That part, I don't know if I can answer, but so VP mortgage banker, First Horizon Bank.
Oh, VP, excuse me.
Yeah, it's okay. Just check the signature line next time. No, I'm just kidding. I've been in the mortgage industry for 8 years. I've worked on all different sides of the business. So, when it comes to really the three sides are a brokerage. Yeah. So like that's a mortgage brokerage. I could be running one myself, just like you're running a real estate brokerage. Right. And then you have what's called retail. So retail lenders are just private mortgage companies. Mm-hmm. So that could be like, a Quicken or Rocket Mortgage. That's kind of like a private company. And then you've got banks and credit unions. Which is you, right? Exactly. Okay. So that's me. First Horizon is a bank. And, I've worked on all three different layers of it. And everyone is, has its ups and its downs and pros and cons, just like anything in this world. So, but yeah, out here in Houston and met you.
Because you're not from here, right?
No.
Where are you from again?
Portland, Oregon.
Okay.
Moved out here a year ago.
Okay, cool. Yeah. How's your wife and kids liking that? You just yanked them up out of there. Like, what the heck?
Yeah.
They're good?
No, they love it now. I mean, definitely the first probably 6 months. It was hard? Oh, yeah, no. It was. I mean, my wife just didn't really know anybody, and me, I'm just working.
Social butterfly. And you're a social butterfly, man.
Yeah, I'm pretty social.
Like low key. Low key with it too,
pretty
guys.
Social. Yeah.
So full disclosure, Matt and our kids play soccer together for the Dynamo Dash. Soon to be something else. We'll talk about that another day. Yeah. But that's how we met each other. And I don't just give courtesy business out.
Totally.
So you clearly made an impression upon me. My husband gave you the stamp of approval, and I have been closing deals with Matthew ever since. I call him Matt, so I'm not going to be so formal. Yeah. So you've done a lot of great things for myself, my clients, my agents. So we're grateful, for the partnership. And that is why he's here today, guys. So we've had a lot of talk surrounding interest rates and, the different financing challenges that a lot of buyers are seeing right now. So I really like to set the record straight on this podcast. And I'm very good at that. Yeah. So you are here to set the record straight about unique financing opportunities, specifically as it relates to physicians. I really want to dive into that. I know we're going to talk about some other great programs too. But for me, when I come across physicians that do not know about the physician loan, and then when I go further and find out that banks like First Horizon are one of the only ones, one of the very few that provide that option, it always is shocking to me. So I want to use this platform as an opportunity to tell people first about that, and then we'll jump into a little bit more about the other portfolio loans that you offer.
Totally. Yeah. And, one of the best things about our bank and a lot of banks in general is that we have the option to offer what's called portfolio in-house loans. Okay. So what that means is we underwrite the loan and we make our own guidelines for the loan.
So guidelines as in overlays, right? Is that kind of like another term for overlays?
Not really. Okay. So an overlay would be something like this. So let's say Fannie Mae, and Freddie Mac say that their minimum credit score is 620.
Right.
But then a lender says, well, ours is 640.
Got it.
So that's an overlay that is laying over what the actual selling guidelines are.
Yeah.
Per like Fannie Mae, Freddie Mac, FHA, VA, you know, all of those secondary mortgage loans.
So the in-house means what then?
So the in-house means we're customizing this loan for the client.
Okay.
So for the doctor loan, we can talk about that.
Yeah.
So the doctor loan and what it is we're carrying it on our balance sheet. So we don't need the money, the liquidity from another source in order to fund the loan.
And you're not selling it.
Correct.
Okay.
It's an in-house loan, portfolio in-house loan. So the doctor loan, physician loan, it's one of my favorites just because of all the perks that I'll tell you about here.
Yeah.
So it can be used for any active physician.
Okay.
It also can be used with residents or folks that are in fellowship.
Yeah.
Fellowship's typically, you know, somebody who does their residency and then like wants to specialize in a certain area.
Okay.
So then they'll do like another 3 years and that's called like a fellowship.
Oh my gosh.
And then they'll go into like full on doctor mode.
Yeah. So it's an added layer and it takes longer then when you want to specialize?
Yeah, I was just talking to somebody yesterday and kind of asking those kind of questions too.
Yeah.
Like, oh, well, how long exactly does that take? And he was like, well, yeah, it's going to take my wife, 3 more years. She just got finished with residency. But,
yeah,
it's cool.
More money, more problems.
Future. So yeah, let's talk about the benefits.
Yeah.
So the main benefits of these programs are 0% down.
Yes.
No mortgage insurance.
What?
Yeah. And you're having rates. I just priced one out today. And just to set the record straight, this is on the 2nd of March. So
yes.
Don't quote me on rates. But it was a 720 credit score.
That disclaimer was so funny.
Don't quote me today.
You lenders have to be really careful with that too. Like I see all these disclaimers on you guys' stuff. Good. Thank you for doing that actually.
But
so what was the rate?
So the rate was 5.375.
That's crazy. And for the record, what is the rate for something else right now? March 2nd?
So
easily what?
740 credit. Conventional is right around 725 to 7.375. 5 or 20% down.
Yeah.
So it's a huge, like if you take that amount of rate, which is about 1.5 points, right? And, you put that into a $500,000 or even $1 million loan or whatever.
Yeah.
You're talking hundreds of dollars.
Like how much? Like $1,800?
Well, a $500,000 loan, let's just say, because you're not even factoring in the mortgage insurance that you're not
going to have, which is good.
Yeah, up to $1.5 million. These doctor loans have zero mortgage. Well, up to 1.5 is zero down, and then they all have no mortgage insurance. But for instance, a $500,000 loan, difference in those rates is probably $350. Just kind of off the top of my head.
Yeah, but still, it's pretty significant. I know that the rates are a point of contention for many. However, when we're talking about loan products like this that still have so much value because the rates are so low, you mentioned no down payment, you mentioned no PMI, and you lenders a lot of times call it MI. So do we drop the P for a reason? I've just always wondered. Because it's just slang.
It's private mortgage
slang?
Insurance or mortgage insurance.
Okay.
And then there's MIP, which would be used for like an FHA loan. Right. So that's just essentially a mortgage insurance premium that's tied onto the loan for FHA deals.
Right.
But yeah, so for the doctor loan, it's zero down up to $1.5 million, up to $2 million. So in between 1.5 to 2, you can put 5% down.
Okay. Can or required?
It's required.
It's required, right? Yeah. Okay.
And then up to 2.5, you need 10% down.
Okay.
But there are exceptions, and that's the beauty of these loans is if it makes sense, to our underwriting management team, we can say, hey, here's the situation. It's not always cut and dry. Yeah. Like for instance, I had a doctor that was looking at a $3.9 million house, and I had to submit an exception to use the program, and they said, okay, well, according to this, and this, if he does that, then, we'll finance him. So
interesting. But at what down payment?
That was just 10%.
His was 10. Oh, wow.
Yeah. So same rule up to 2.5, anything over that. Typically.
So they basically just kind of need to like the details, like the file, like the credit, like the income, and then
ratios.
there are exceptions. And it's mainly because it's an in-house product.
Exactly.
Okay.
And that's the beauty, because if you run like the Fannie Mae or Freddie Mac's automated underwriting system,
right,
you have to get an accept or an approve eligible to deliver that loan to Fannie or Freddie.
Right.
For us, we're not running it through Fannie and Freddie.
Right.
It's staying on the bank's balance sheet. So we're able to, make it make sense if it has enough, I guess, still sticking into our in-house guidelines.
Right. And that's what I always like to talk to my clients about too, because I was even a product of, when I bought my first house, being told no by one lender.
Wow.
And then, and it was before I got married, before I had kids, before I had like what I would consider a real, type of job. I bought my first house, I think at 26 or something like that. And the first lender told me no. I was devastated. And I just was so like dog with a bone, scouring the internet, trying to find lenders that work with, not so great situations.
Sure.
And I stumbled across someone, I'll never forget, it was Prime Lending.
Okay.
And they said yes. So anytime I'm talking to, potential clients, and they have gotten a no or two or whatever, I always tell them to at least get a second or third opinion before, they tap out.
Sure.
And not only do I talk to them about that, I also just kind of make sure that the lender partners that I have these types of tricks up their sleeve, where we can, get in-house approval on certain products or certain, situations.
Right.
Not everything is about a computer system. A lot of underwriters do accept written explanations for certain things. So I'm a big proponent for making sure that my clients have options. And that is why, I invited you here to just kind of get those options out there.
Definitely.
So I know you wanted to mention too about some of the other portfolio loans. What do those look like? How do they compare? And how do people that are not physicians, get to take advantage of those?
Yeah, so let's kind of stay on the higher down payment side of things, then I'll work my way backwards. So we also have what's called adjustable rate mortgages. So we have a 3-year, a 5-year, a 7-year, and a 10-year adjustable rate mortgage.
Yeah.
And what that means is essentially your rate is fixed for either 3, 5, 7, or 10 years, just like it would be on a conventional or an FHA. Any other fixed rate mortgage, 30-year term, or there's 15, 20s, you can kind of set your amount. But the ARM, it's called adjustable because after that time, if you haven't refinanced, it will adjust every 6 months.
So that is a big misconception that people don't understand. They think that an ARM or an adjustable rate mortgage is a mortgage where the rate adjusts every year or whenever it wants to.
Sure.
They don't realize that it is set for a certain long period of time, and then it adjusts. So thank you for setting the record straight. Everybody that's out there and they're scared of ARMs, it is just really about locking in the rate for a certain period of time. And then after that time is when it can start to adjust if you have not refinanced yet. So that's really a good point.
On average, people are making, tweaks to their loan every 3 to 5 years, whether that's refinancing, cash out, whether it's selling your house.
Yeah.
Your average person isn't living in their house for longer than 7 years. So,
that's true.
If I have the opportunity, and the caveat to these loans that we do are you have to have 20% down,
right,
and then you need 12 months of reserves after your down payment.
Okay.
So it is it's a much more, it's not everybody's going to have that that opportunity specifically, but when it comes to the interest rates, now you're talking turkey.
Right. Like if I have this, I'm going to get the better rate.
And I just priced one of those out before I got here.
Yeah.
And that one was at 5.625.
So this podcast also speaks to new agents, not just buyers, sellers, lenders, or landlords and tenants. So I want you to talk a little bit about because you've had several phone calls in here before we started filming, and I love it. That's kind of the way I'm rolling too. But I want you to talk a little bit to the audience about who you're pricing these loans out for. Not their names, obviously, but where are they coming from? Yeah. Are they coming to you unrepresented and starting the finance process first? Yeah. Do you see them finding homes or buying homes in a specific pocket of the Houston area? What are you seeing? What are the profiles of these buyers?
Sure. Well, I mean, most of my clients, especially in this market, since I'm fairly new, to Houston, I've been here for a year. Yeah. I literally bet on myself coming out here, even though I've been in the industry for 8 years. I don't know anybody that hasn't.
When you relocate, you got to have some balls to do that.
Yeah. I just was like, hey, that's true.
It's a must.
We've got those. But, I was like, hey, I need to get out and start, meeting people. And obviously our paths crossed organically, which you get what you look for, right? Yeah. And, obviously we had met before, but we hadn't really talked about business until probably, I don't know, a month or two in, because even though we're at practice, on the sidelines. Yeah, well, that and you're on the phone here, I'm on the phone there.
So like, what are you doing?
Yeah, and then all of a sudden, I'm hearing something. I think my wife Carabelle told me that. Oh, did you know Courtney's in real estate?
Oh, it's probably like, social media with Carabelle. Like we probably followed each other first, and then that's I think what happened. You're absolutely right.
Yeah, she's like, did you know Courtney's in real estate? And I was like, oh, my antenna is up. I'm like, all right, well let's get to business.
And that's what we've been doing ever since.
Absolutely. And, as far as clients, so most of my business comes from agents that I've, met at a golf course or just organically. And, it's that those are the best type of referrals because agents do have the chance to influence their clients and help them make a good decision.
That's and look, my brand manager looked up the minute you said that word because that is really what we're doing. We're influencing so much surrounding these deals, which is why, people like myself that have been submersed in real estate for, I'd say, 16, 17 years or so, I know that real estate professionals aren't going anywhere. Mm-hmm. Even during COVID, when they tried to phase us out and say we couldn't come to closings and, have all these different AI things going on, which, are still great, but will never go completely away because people still need that human pulse. Mm-hmm. They still need that influence, especially these first timers that know absolutely nothing. Totally. So I think it's really interesting that you bring that up. Yeah. But tell us a little bit more about the buyer's profile then. What do you see? I mean, are they relocating in droves? What are you seeing?
I think I've got one client right now that's looking at relocating from Oregon to Dallas. But, business, realtors, past clients, and even current clients, right? Because once you're used to getting quoted a 7% rate by a different lender who doesn't have in-house products, and then they run into their friend who's, reticulating, activating systems, buzzing, I'm buying a house. So they hear, oh, you're buying a house too. But they get into conversation. Right. And they're like, yeah, I got, this happened with 3 Exxon deals. I got 3 deals in a row. Because
listen up, Exxon.
Oh yeah, Exxon. If you're out there, you guys need to put me on the preferred lender list because
you could be on it already and you just don't even know.
No, I should be, but they go through a relo company who uses a retail company who doesn't have these products.
Call them out, Matt. You are angry.
I am calling them out because I sent them an email, not yet Exxon, but I did.
Who did you email, Matt?
I sent the Cardis folks an email, the relo company, twice, and I said, hey, your client, these people aren't happy with what they're getting. You need to put me on the list directly.
Put me in, coach.
We don't have room right now. I'm like, what are you talking about? You only got one other lender on there. And it's a retail lender.
Oh my gosh.
You better wait. You better open up.
Open up.
Yeah. You better open up the door. So anyways, that got me a little excited there because I'm helping people.
And telling them that stuff that they don't know.
Well, in their...
He is mad, ladies and gentlemen.
5% to 5.25%. Those were the rates.
That's a big deal. That's a big deal.
Versus a 7% rate that were being quoted.
Wow.
So of course I want to help people that want to save money.
Did you tell them that too?
It was a nice email. Okay. I was friendly at the end.
Ain't no emails from you, nice Matt. Just cut the shit now.
I was friendly. Yeah. But as far as the rest of
buyers.
It, the way. Every lender would love to say, hey, client, don't you think it would make more sense, or hey, society, to get your pre-approval before you talk to an agent?
Oh my gosh.
I mean, of course, that's what we would recommend, because then we would be like, hey, Courtney, here's the client that's already pre-approved,
yes.
you know, and they would love to work with you, I'm sure. Here, connect, right? Similar. It's backwards though, because it has been that way forever in the industry.
Yeah.
Because
window shopping.
people are already, they're looking for the end product without going through the entire process.
Work. And I'm happy that you brought that up too, because in my buyer consultations, my clients are filling that application out at the end of the conversation.
Yeah.
And it's super important that we as agents are super knowledgeable about what that process looks like and how to get these consumers to understand the importance of pulling that trigger. I call it seeing what's under the hood. Let's see, you look good, but let's see what's really going on with your credit and your finances, etc. That's the only way you're ever going to know if you're ready now or if you'll be ready later after doing X, Y, Z. You throwing stuff at the wall just to see if it's going to stick is just such a waste of your time. So before I even give leads to my agents, we're going through that work first to get the client pre-approved, because that is the, hardest hurdle to overcome. So new agents out there, if you are not having consultations and you're not getting clients to actually fill out mortgage applications by the end of the conversation, you are the problem.
That is a problem. And here's the real problem is a lot of that with agents who don't do that are in a mindset of scarcity. So they're just so happy to have somebody that have called them that might possibly be looking to buy a house. But it's real.
It's the truth.
It's 100% the truth. And this podcast is to educate clients, agents, any other people in this industry, whether it's a mortgage person or, a home inspector is watching this, whoever. Like at the end of the day, if you have a scarcity mindset, you're not going to take those steps because you unfortunately want to feel like you're busy.
Yeah.
And the feeling like you're busy and actually being efficient are two completely different things. Me, I'm all about mental agility. So mental agility to me is being able to compartmentalize, hop in, hop out, not take my previous emotions with me to the next conversation, and being able to always give my genuine self without actually like thinking about the past or what just happened or who just called me or what the appraiser just said. Like you have to have mental agility in this business to be successful.
Yeah.
And that's from the lending side to the agent side to title side. Like it doesn't really matter, because if you don't have mental agility, you're just going to be stuck in the quicksand that you're already scraping to get out of.
Yeah.
And you're really not going to be going anywhere.
Right.
You're just going to feel busy because you woke up being like, hey, I'm busy today. I got, I got this client that I'm going to go, I'm going to go show houses to, but you haven't even got them pre-approved.
Oh my God.
So you're busy wasting and literally spending your time. You're spending it.
So as new agents too, when I'm speaking to our agents at the firm, we are constantly trying to instill in them ways to not waste time. Like you have me because you're able to, skip that process of wasting your freaking time. Yeah. So I am a firm believer in that. I definitely think that, when you are realizing the exercise of it all, I'm 6-7 years in here in Texas. I did sell previously in another state, but I have still lost a deal.
Sure.
And you have to have about 8 to 10 more in the pipeline to just not feel it anymore.
Yeah.
And the only way that you get away from that is to just keep doing the work, like you said, because deals will fall apart. Things will not work out. Your clients may not be able to be somebody that you can get through to. And you have to have the mental agility, like you said, to either persevere and move forward, go find more. It's a numbers game. All of what you just said is 100% true.
Yeah. You'll know how successful you are going to be now and into the future. Just look at your pipeline.
Wow.
That's really it. If you want to build a business, if you want to make multiple 6 figures, 7 figures in this business, you better be having the pipeline stacked.
Yes, at all times.
Because if your pipeline isn't stacked, you're literally banking on one person to feed your family.
Oh my God.
And in this business, unfortunately, there's too many people
willing to do that, right?
Well, not only willing to do that, but there's too many ways the deal could go wrong.
Yeah.
Right? Because even if your client, I've pre-approved them, 780 credit, 700 credit, like crispy clean deal, goes to a house, gets a contract accepted, has the home inspection, the foundation's cracked, but you've already gone and had a party at the agency.
Not a party.
Not you, but I'm saying if it were your own deal.
Yeah.
Right? Like
or
you
posted you're under contract.
I
always say under contracts don't matter. Tell me when it's sold.
Like imagine that emotional drainage that's going to happen to you if that's time. Like your only deal that month. But you're super excited. You know, so that's what my point is the pipeline is your best friend. And that's going to dictate what your business is going to look like in this 30 days, 60 days, 90 days, and for the rest of the year sometimes.
And it's good to hear that from a lender perspective too, because, you know, it's easy to preach it on a real estate side, but to hear that, you know, you have to deal with that too is refreshing and it's a reminder. And then I want to point out one thing you mentioned as far as so many things that can go wrong in these deals, guys. There are I'm just going to throw out the number 10, a good 10 people that have a chance to mess up your deal, from the lender to the realtor to the title company to the surveyor to the appraiser, homeowner insurance provider. There are so many different ways that the deal can go awry. So you're absolutely right. You have to have a whole stream of them in the pipeline to really, you know, make yourself eat at the end of the situation. So very interesting. So you think that you've given them enough in terms of options, portfolio loan wise, what to look for? What are you thinking?
So I would say just, you know, as far as the portfolio, another aspect is, so we have what's also called a professional loan. Yeah. And then we have a hero's loan as well. We also have zero down, you know, products with no mortgage insurance for first time buyers that have to fit into a box of, you know, income wise, where a property is, things like that. But so our professional loan, that's typically for attorneys, CPAs, doctors could use it too, but I don't know why you would if you could have do the doctor
other
loan. Dentists, because a lot of agents will be like, hey, is this for dentists?
So, but it's not, right?
No,
just to clarify for everyone out there.
Surgeons, yes.
Yes.
But not a just DDS.
Okay.
So
I get that question a lot, so I wanted to set that record straight too.
Yeah, pharmacists, veterinarians, and the key to that program and the heroes is it's a minimum 3% down. Okay. It's a conventional loan, but you get the same benefit as if you put 20% down by avoiding the mortgage insurance. Okay. So depending on your loan amount, the mortgage insurance could be, if it's a lower loan amount, maybe $60 a month. Okay. But if it's higher, it might be $200, and it really depends, you know, on the credit, but with these credit scores, you need to have 660 for the heroes, 680 for professional. And just to finish off the hero side of it, this one you're looking at, you know, police officers, sheriff, correctional officers, firefighters, EMTs, and essentially nurses.
Okay.
Nurse
so
practitioners
correctional officers qualify. Yeah. That's a huge thing in Texas.
Heroes?
I feel like I know. Oh my gosh. So I've heard a lot of, like, I think that's like a huge occupation here in Texas. Is that true? Or is it just Houston?
We gotta somebody Google the jails around here.
Yeah, maybe it's just because Texas is so large. Maybe I don't know.
Totally.
So I'm thinking that that's kind of where that comes from. So we're going to jump into a game. I feel like they've got enough
that is
real estate for the day, because now it gets a little spicy.
Uh-oh.
All right, so y'all ready to play this game? Okay. So for the record, y'all are going to get tired of this, but I do not like playing games. I'm not going to give a spiel as to why. I do it every episode, so I'm not going to bore the people. But we're going to play a game, and it's called Beef for Real.
Whoa. I don't know how to be anything different.
We're censored. He really doesn't. He really doesn't. So this is going to be interesting. So here's how we play the game.
Okay.
You're going to ask me 2 questions. I'll ask you 2 questions. If you answer them, let me take that back. If I think you're answering it truthfully, I'm going to let you slide. You do not have to drink your water that's in your shot glass.
Okay.
If I feel like you are answering politically correct, if you are faking it, if you think that your wife's going to get mad on the response, then I'm going to call you out and we're going to have to do something. I'm going to have to give you some type of punishment. I got to check my notes and my rules. You're not drinking. We'll talk about that later. But I need you guys to start thinking about what that looks like, okay? If we think that he is not being for real.
Okay, so be for real then, and you're all good.
You have to be for real.
Huh? I don't know.
You got look, he ain't got no money. I ain't got no money. We need to hit you where it hurts in the pockets. You gonna give up that gold chain. We gonna take his chain.
Take that. It's a Singapore souvenir.
So I'm gonna go easy on you. I'm gonna let you do me first. So where are your questions at? You can pick which ones you want. It doesn't matter.
They're all called Big Talk.
Yes. So flip them over.
I'm just going to pick one so
you're going to do it the good way. Because I'm looking at mine to figure out what I'm asking you.
Oh, she's trying to get the real. Here we go.
Let me get teed up. Hold on. No, go ahead.
Ready?
Yes.
What do you value that doesn't cost money?
Oh, without question, family. I mean, that's too easy. I'm going to let you pick again, sir. Right, you know me too well. Come on.
All right.
Pick something juicy.
Could have been like sunbathing or something.
That was lame.
All right. What are you curious about lately? Curious. Yeah.
Huh. I would say.
How do I get this show on?
Oh, no. That would be me needing to take a shot.
Okay.
That'd
be just too weak.
Yeah. Right. I would say that I'm really curious about how many realtors are going to stop selling real estate by the end of the year.
Whoa.
So people thought that it was going to happen much sooner, but I've been reading a lot of statistics that are showing that it's going to take a little bit longer to phase out, those unserious parties. They're thinking towards the end of this year or the beginning of next. So that is what I'm very curious about because I'm ready for that market share. I'm ready for the challenges that brings. The takeover.
Well, it's going to be the same thing in lending too.
Really? So you think lenders are dropping like flies?
Oh, yeah.
Huh. I didn't even consider that.
If not more.
Okay.
Okay. It's... Because here's the thing, realtors, you guys are making, say, 3% on a deal.
Yeah.
Lenders are making anywhere from 1 to maybe less. 1.5, or it could be less depending on their exact role, what company.
But you have much more value.
But here's the thing is, for a lender, most lenders, you have to be available in pushing that file forward day in and day out. When you as an agent, you could take way less time, get a contract, make 3 times the money, and be safe.
Why you gotta do us like that?
But be financially safer than a lender.
That's true.
So for every one deal you're writing, we have to write 2 or 3 to feed our family the way that,
So do you all also understand, or do you see it this way, that we can close less deals and still be just as successful? Yeah. Or do you expect us to be selling more because we're making more money? What do you think about that?
I mean, I think it's specific to the person.
Okay.
Right? If somebody's comfortable selling 1 deal a month, but if it's a $1 million deal and you make $30K, then they're fine. But if they sold 1 deal and it was a $200,000 house, then they're going to be a little bit stressed. So I expect, the real ones, like you said, who's going to be around, those are the people that, are going to be fine.
Yeah.
But it's good. But the key to what the point I was about to make is you as an agent don't have to put in as much time as a lender does to make really sure the loan closes because my point is you could have a part-time job and still go work real estate on the weekends, just like the pay stub client you might have who's stuck in their job from 9 to 5 or whatever. So you could actually manipulate your time to their time, take your lunch break to respond to emails.
Yeah.
if you're about that life.
Wow, that is really insightful. No, that's really insightful.
But as a lender, we have to make sure we're in the office, in the computer.
Yeah.
I don't so much just because I have an awesome team. Mm-hmm. So like I could be out in the field, doing these type of things and not be stressed and looking at my phone all day long. Yeah. But that's because I have a great assistant. My processor's awesome, who both of them. But most lenders, they're at their computer responding to emails all day long, trying to make sure deals close.
Ouch. Okay.
So one deal, means a lot more, to a lender than it might to an agent, because one deal might fall out for you, but if that falls out for the lender and that's their only deal,
then they're
because we're not getting paid, most lenders, for let's say a 30-day close, and then 2 weeks after that. So you're 45 days away.
So you don't get paid at the table?
No. We're 2 weeks away after that, essentially.
Are you serious?
Yeah. So you don't close something and you're 45 days away from being broke. Some people.
I'm not trying to laugh. Did somebody just look at me?
Yeah. So that's the case for a lot of lenders right now.
I didn't expect that question to go that way. Yeah. Well. So was I for real? You believe me?
It was great.
That was a good question. I really did answer it truthfully.
Yeah. I'll give you that one.
So, and you better be honest. Sorry, Carabelle. What was the best compliment you ever received? And I'm going to add some sauce on that. Who gave it to you?
Best compliment.
Boom. So what happened? What had happened, Matt?
You're only thinking a one-way street here. See, I'm thinking a wide.
No, you thinking safe.
Honestly,
and I'm going to hit your pockets if that's what you're doing.
The best compliments are when I receive just 5-star reviews from my clients who are literally like so grateful.
The only man in the room.
My guy. He's
whatever.
No, but
what happened? Okay, come
for
on.
Me, for me, the best compliment is reassurance that what my goal is for the client is coming through to them, and they genuinely feel it.
Yeah, they cry.
They cry.
They bring happy. You gifts to closing. It's like. It's shocking.
Yeah, because to me, an online review, you can go to my Zillow profile. It's all 5 stars.
Oh my gosh.
But
how many surveys you think
42 or 3 or something?
That's good.
But those are the best compliments, because it could be the client who we had to extend 2 weeks and fix this and restructure, ton of things because the appraisal came in low, or those deals still, because they know how hard we worked to find a way to help them refile their taxes or something like that, to get more income to qualify, and just how grateful they are and they truly express it. Those to me are what keep me going.
You're right. I'm not going to hit them in his pocket, y'all.
She's like, are you sure it wasn't when the hairdresser said they liked your green eyes or something?
You got green eyes? You sure do.
She actually.
Oh my gosh, I never looked in your eyes, Matt.
Well, what's wrong with you?
I've never noticed that.
No, so when I was 10 or 11, I do remember this compliment.
Listen, I'm not trying to hear no 10 or 11
I was getting a haircut.
What happened?
And the lady goes, oh my gosh, your eyes are so green. They're like cat eyes.
What?
I was like, okay.
Get out of that chair.
Cool. Yeah.
An old lady said this to you at 11 years old?
She's probably mid-30s.
Oh, she was shooting a shot. That's really bad. That's bad. We're going to pivot.
All right.
I'm not going to embarrass you and dig deeper. I'm just going to leave it at that. That was great. We really do impact lives in real estate. I know you guys think that we're just out here showing pretty houses. But there is so much time and dedication that you actually just have to have in order to really, make a change in somebody's lifestyle, their life, and, the things that they accomplish. So I'm going to give you that because you're right.
All right. I got that one.
What's my question?
I wasn't expecting
You got one more.
Okay. Let's check them.
Mic check.
So have all these questions been asked before?
Probably not.
Okay, good. So they're not recycled, right? That's good.
Well, we'll know. We'll edit if that's the case.
That one might be a contention.
Oh, gosh.
You gave me all the bootleg questions. Okay. I like this one. I like this
my
one.
next one, too.
So because 5 years goes by in just a snap of a finger, right? So this is a great question because we can all learn from this. What advice would you give to yourself 5 years ago?
Oh my gosh. I'm trying to think of the very first thing.
That was like 2018.
Right. Which, by the way, 5 years in is when I took my broker's license exam.
Okay, so we're right on schedule.
The first thing that came to my mind was, you really contemplated not even getting your real estate license here because I got it in Illinois and the states weren't reciprocal. So 5 or 6 years ago, that's what I was thinking and wondering if I should even start this over again. And I just can't believe that I even considered not, because this is where we are. So I would say that 5 years ago, I would have told myself that, yeah, this shit's going to work. Yeah. Like, it's going to work for you, and you should, don't be afraid to start over. Yeah, like starting over. There you go. That's what it is. Yeah. Starting over. Yeah. I relocated here, and I, started my life over, essentially.
You bet on yourself.
I bet on myself.
Same past as me, kind of.
Right. So started over, but then most importantly, I think one of the hardest things to do was even starting my career over. So I did both, started my life over and started the career over. So without question, I would have told myself, don't be afraid to start over.
Well, and it sounds like you had a clear vision, or at least at the beginning, maybe 5 years ago, it was a little cloudy, but you gave yourself that just ability to be clear.
Right.
Here's where I want to take it. And then 5 years later, we're sitting here talking today. So
right.
That's great advice.
So was I honest? Do you think I was honest?
Oh, yeah.
I want my shot though. Damn, Matt. Shit.
Well, the problem is we're not used to being fake.
Oh, I cannot.
That's like against fake. My realness religion.
There's a thing. Is that a thing?
Realness religion? Yeah. Fakeness is the enemy.
Okay, so I know what he's going to say to this, guys, but I still want to ask it. I want to see if he's going to be honest. Because I'm still, I got to see you on Saturday and Sunday.
Sneaky.
I'm going to get in those pockets if you're not doing what you're supposed to do. What should people do more of? And if you say what I think you're going to say, I'm going to get you. So just make sure it's not
going to be what you think.
Okay, good.
It won't be what you think.
What should people do more of?
Gosh, I want to go so many different places with this one.
They say you're supposed to do the first of mind. So whatever just quickly came to you. It was weird,
like 12 things just hit me.
12?
What should people do more of?
Yeah.
People should do more of the opposite of what society is doing.
Okay.
And it's because, I'll just kind of give this analogy.
Least one example.
So here's the analogy: is back in, college and playing sports, football. My whole saying was, "Are you a him or are you a them?" Oh. Are you him in the game or are you them standing on the sidelines?
Ouch.
Are you cheering for him or are you them?
Yeah.
Well, thems are cheering for him. So it's either you're a him or a them, and they, flock together. Mm-hmm. You don't see eagles riding around with seagulls.
No.
So, it's doing the opposite of what the pack is doing, and it's willing to bet on yourself, right. And it's willing to be lonely in the position it takes
that loneliness
to be successful.
Yeah.
And the hardest thing that, I've gone through, and a lot of it's to do with, I know you were going to ask me about 75 hard and all this other stuff, but the hardest thing, to do what everybody's not doing is the feeling in the moment of being by yourself, because your friends and your past wants to tell you, hey, come on back here. And you can't breach through the door of success if you're not willing to be different than everybody else.
Yeah.
You have to be willing, and you have to bet on yourself, because if you don't, you're just going to be the same as you were the last 5-10 years.
Or as everybody else.
And as everybody else. But the true power of it is when that mental clarity clicks, and when now you might have an opportunity and have the influence on the people that they may feel like you did leave them in the dust, but an opportunity may arise because of the work you put in yourself. You're now able to reach down and pick them up. Yeah. And say, hey, look, I know where you're at. I was there. Yeah. Like I've been there. The problem is you're still there.
You're still there. So I know what's on the other side. Listen to me, consider what I'm saying. I made it to the other side. I know you probably want to be here. And this is just one way to get there if you're interested. Yeah. I like that.
All
right. I'm not gonna hit you in your pockets. I know Carabelle wants to go to Louis Vuitton next week. I'm not gonna get you.
Giving bad
Carabelle's
ideas.
like, that's 3. I said her name 3 times in my podcast. I love you, Carabelle. That's
tag
4.
her so she gets all
I
the
love her.
too.
She is my girl. I love her. So nobody had to take these shots, but we're going to.
Yep.
So Matt's glass has water because he's a punk.
Purified.
You're a 75-day hard punk.
Yep.
So I'll leave that story for another day. Cheers. I really appreciate having you on the show. Drink up. Are you thirsty?
Mm-hmm.
So there's true. That. Oh, I got one more drop.
Yeah. Why don't you tell people what that is? Because I didn't even know what a sidecar was.
So a sidecar is my favorite drink in the world next to espresso and water.
There we go.
And
disclaimer.
A sidecar consists of Grand Marnier, if you know what you're doing. Cognac, only the best. So, Douce, Remy, something like that. Lemon juice.
Okay.
And then if you want triple sec, you really don't have to. Yeah. You could have a little agave in there if you like yours sweeter or whatever. But that's what it consists of. And I am obsessed. Like, it's just, my husband knows how to make them perfectly now. So I am winning. Like, I'm winning right now.
We're here to
So that's a sidecar. That is what I love. So if you ever want to send me a drink and you see me out, that's what I need. No sugar on the rim.
Okay.
No sugar on the rim.
Don't sugar it up.
So, Matt, thank you so much for letting me grill you. I'm not easy.
Totally.
We don't play about our kids on these fields, but when it comes to business, I feel like you and I really understand each other. I can, tussle with you and you can give it back to me. So I really, really appreciate that. And it's very rare in our industry. But tell everybody where they can find you. Where do you hang out? Oh
I'm hanging. Yeah.
Where do you hang out, Matt?
See, I'm not the guy that's like, find me on Facebook and Twitter and YouTube, except for this one.
Where are you at?
But you can find me at real.mortgage.estate.
That was smart,
by the way. On Instagram. You like that?
Yeah.
Guess what my website is?
What?
Closinghomeloans.com. You say, how did he get
my
that?
My Google expert back there is like, damn.
Closinghomeloans.com. And I got it for like the penny rate.
Are you serious?
Like last year.
Oh my gosh.
Yeah, so I was juiced about that.
Geeked up. We call that geeked up.
Houston's geeked up. I'm juiced. The West Coast thing, I guess. But so Instagram, real.mortgage.estate. And then I'm actually going to put this audio on my podcast, which is The Real Mortgage Estate Show. Oh. I need to drop more episodes.
Yeah,
so I'm going to need to have you on there
You
too.
can rent out my space if you'd like. I have the perfect production crew. Yes, I did.
They ain't
I'm
free.
a businesswoman, Matt.
They ain't free.
I pay rent in here.
I hear you. I might need to because I love this setup.
Real. Like, they really do. They do their thing. We're a few episodes in, but they really figure it out. Yeah. So I'm with it.
No, I appreciate it.
So that's where we find you. I'm sure that your link to apply is on your profile.
Yeah,
or
closinghomeloans.com. My website's on the Instagram as well. So, I like to, I don't only just post things about mortgage.
Yeah.
I do post things about personal development or like a random quote I'm thinking of. And, I don't just take people's quotes and put it on my Instagram. Yeah. I put how I feel, what I'm doing. Maybe it's 5 a.m. workout.
Right.
And post something, so it's not just mortgage, but you can always DM, ask me any questions on there too. So, yeah.
And real estate is a lifestyle. So, I preach that all the time too. People really need to get a little bit more in tune with, the different things that we do. We're not just selling houses. Yeah. You're not just doing loans.
Totally.
So, yeah, I'm with that. I'm with that for sure. So thank you for stopping by. It was lovely to have you, even though you're drinking water. We won't go there.
Okay. No, I just want to say before you do.
What else do you want to say, Matt?
I mean, I'm just super impressed by what you have done in 5 years, even though I've only known you for one. Mm-hmm. But just if everybody can literally think to themselves what 5 years from today looks like for you, here's a spitting image of or example of what can be done if you do what we said, and that's bet on yourself.
Matt, come on.
Get rid of the distractions. Pour into yourself. This is the result. This lady has a husband, 3 wild boys.
They are wild.
And still is crushing it in real estate and running an entire brokerage. So if you don't think that you're worth anything more than where you're at right now, take a step back, reflect, because it can happen. So we appreciate you and
and I'm not going to cry. So what I'm going to do is I'm going to excuse you.
All right.
But thank you, Matt. I really appreciate you saying that. It's just a testament to me just doing it. Yeah. I literally just do. And then I look up and I'm like, what is happening? Mm-hmm. That's literally what happens to me.
Time's going by either way.
So yeah, it's going by either way. You said pouring into ourselves. I pour into so many other people besides myself too. Mm-hmm. So that kind of helps me propel along and rationalize, the whole thing. But I appreciate you saying that.
You're welcome.
I wasn't expecting that. So in closing, guys, I want to thank Matt for stopping by. Hopefully you guys picked up on some gems from him. We are changing the trajectory in real estate. I am taking off that agent title and adding in advisor. We are real estate advisors. We are educating and empowering buyers, sellers, landlords, tenants, and agents to dig a little bit deeper in what they're doing every day. And more importantly, on this podcast, Selling Houston, you will start to understand a little bit more on ways to do that, ways to earn more money, ways to work more efficiently and effectively, and then most importantly, achieving the homeownership dream. So thank you for tuning in. I am your host, Courtney Okonlamo. This is Selling Houston.
See y'all.
See you next time.